Hello everyone, and welcome back to the channel. My name is Sam, and I'm a financial advisor, dedicated to helping people make smarter money decisions, grow their wealth, and achieve financial freedom. Today, we're talking about a topic that can completely change your financial future. Start investing early, even with small amounts. Now, many people believe that investing is only for the wealthy. They think they need thousands of dollars before they can start building wealth. But what if I told you that even $100 can be enough to begin your investing journey? The truth is that becoming wealthy isn't about how much money you start with. It's about starting early, staying consistent, and giving your money enough time to grow. In this video, I'll walk you through a simple, step-by-step plan that beginners can follow to start investing with small amounts and build wealth over time. So make sure you watch until the end, because I'm going to share practical strategies that anyone can use, regardless of income level. Let's get started on your wealth-building journey today. Why starting early is so important. Let me ask you a question. If two people invest the same amount of money every month, but one starts 10 years earlier, who do you think ends up with more money? The answer is almost always the person who started earlier. Why? Because of something called compound growth. Compound growth means your money earns returns, and then those returns begin earning returns. Over time, this creates a powerful snowball effect. Think about planting a tree. The best time to plant a tree was years ago. The second best time is today. Investing works exactly the same way, but the reality is that if you don't develop the habit now, you'll likely find new reasons to delay later. This is why starting early is one of the most powerful financial decisions you can make. Before we discuss the plan, let's talk about some common mistakes. Mistake number 1. Waiting until you have more money. Many people say, "I'll start investing when I make more money." But the reality is that if you don't develop the habit of investing now, you'll likely continue finding reasons to delay later. Mistake number 2. Looking for quick riches. Keep this money somewhere safe and easily accessible. This money is for protection, not profit. Successful investing is not gambling. Real wealth is built slowly and consistently. Mistake number 3. Not having a plan. Investing without a plan is like driving without a destination. You need a clear strategy. Fortunately, that's exactly what we're going to cover right now. Step 1. Build an emergency fund. Before investing aggressively, create a safety net for life's surprises. Before investing aggressively, create an emergency fund. Life is unpredictable. Unexpected expenses can happen at any time. Your car may need repairs. Medical bills can arise. You may face temporary job loss. That's why every investor should have an emergency fund. Aim for at least $500 to $1,000 initially. Eventually, 3 to 6 months of living expenses. Keep this money somewhere safe and easily accessible. Your emergency fund serves as your financial safety net. Step 2. Pay off high-interest debt. If you have credit card debt or other high-interest debt, focus on paying that down first. Imagine paying 25% interest on debt while hoping to earn 8% from investments. The math doesn't work in your favor. The order should be: build emergency savings, pay off high-interest debt, and start investing consistently. This creates a stronger financial foundation. Step 3. Invest your first $100. Now let's talk about your first investment. Suppose you have $100 available. Many beginners think they need to find the next big stock, but that's usually not the best approach. Instead, focus on diversification. Consider investing in broad market funds that provide exposure to many companies rather than relying on a single stock. A diversified approach helps reduce risk while allowing your money to participate in overall market growth. Remember, your first goal isn't becoming rich overnight. Your first goal is becoming an investor. Step 4. Invest consistently every month. This is where the magic happens. Consistency is more important than the amount you start with. Even if you can only invest $25 per month, $50 per month, or $100 per month, keep doing it. Month after month, year after year. Set up automatic investments if possible. Treat investing like any other monthly bill. Pay yourself first. When investing becomes automatic, building wealth becomes much easier. Step 5. Reinvest your profits. As your investments grow, some may generate dividends or gains. One of the smartest things you can do is reinvest those earnings. Instead of spending them, put them back into your investments. This accelerates compound growth. Your money begins working harder for you, and over time, small amounts can grow into significant wealth. Step 6. Stay patient and think long-term. One of the biggest challenges investors face is patience. Markets will rise, markets will fall. That's completely normal. Don't panic during downturns. Don't become overly excited during market booms. Successful investors stay focused on their long-term goals. Remember, investing is a marathon, not a sprint. The people who succeed are often those who stay invested consistently and avoid emotional decisions. Here's a simple example of a simple wealth-building plan. Start with $100. Invest $100 every month. Stay invested for many years. Reinvest earnings. Continue increasing contributions as your income grows. This strategy may not sound exciting, but it's exactly how many successful investors build wealth. Not through luck, not through speculation, but through discipline and consistency. If there's one thing I want you to remember from today's video, it's this. You do not need a lot of money to start investing. You simply need to start. The biggest advantage you have is time. Every day you wait is a day your money isn't working for you. Whether you start with $50, $100, or $500, what matters most is building the habit. Take action today. Start learning, start saving, start investing, and stay consistent. Your future self will thank you for it. Thank you so much for watching. I hope this video helped you understand why starting early is one of the smartest financial decisions you can make. My name is Sam, and as your financial advisor, my mission is to help you build wealth, improve your financial knowledge, and make smarter money decisions. If you found value in this video, don't forget to like, subscribe, and share this video with your friends and family. Press the bell icon and leave a comment below. What is your first investment goal? See you soon. Leave a comment below and tell me, what is the first investment goal you're working toward? I would love to hear from you. Thank you for watching. Stay disciplined, stay invested, and keep building your financial future. Subscribe, share, and press the bell icon to get more financial updates. See you in the next video.
अंधेरी दीवारों में खुद को ढूंढता हूँ ये जो दिन सहारे थे उन्हीं को सोचता हूँ मैं तुम्हारे बिन ये मौसम भी बड़ा बेसर्द लगता है दिल का हर एक कोना अब बहुत ही दूर भरता है अंधेरी दीवारों में खुद को ढूंढता हूँ मैं ये जो दिन सुहाने थे उन्हीं को सोचता हूँ मैं तुम्हारे बिन ये मौसम भी बड़ा सर्द लगता है दिल का हर एक कोना बहुत ही भरता है मेरे साए भी मुझसे अब जुदा होने को कहते हैं तुझे खोने की राहों में ये आंसू बहने लगते हैं कहाँ जाऊं कहाँ ढूंढूं मेरा वो साजो सामा तो मेरी हर एक तमन्ना तू मेरी रूह का मकान तू लकीरों में नहीं लिखा जो तुमने ख्वाब देखा था वफा की इस कहानी में फकत पता तेरा कहाँ होगा, मगर खामोश है दुनिया, कहाँ मेरा जहाँ होगा। बस एक बार मुड़ के देख ले मेरी बेबसी की सूरत, मुझे है आज भी तेरी वफा की सख्त जरूरत। साए मेरे तन्हा सफर बस रह गया दर्द का असर, साए मेरे तन्हा सफर बस रह गया दर्द का असर, दर्द का असर।